Okay, let me welcome on board Anuj Kathuria, the President, India Operations of JK Tyres and Industries, joining in right now. Anuj, hi, morning. Tell me what the replacement volume growth was in the third quarter versus Q2, and also which segments helped fuel your growth this time.
Yeah, so if you take the overall growth in quarter three and compare it with the corresponding quarter of FY23, we have seen a growth. The growth mainly came from the replacement segment. The OE demand was more or less flattish. For us, if you take the overall
Okay, so just to keep in mind that the elections are also approaching, and which segment-wise do you see demand improving? Because we were just speaking to some of the CV players like Ashok Leyland earlier. They were saying that the volumes tend to get slightly soft in the election time. What kind of volume growth are you witnessing for the fourth quarter?
So if you look at the segments, let me start by talking about the commercial vehicles. So what we are seeing is that the area of mining and construction, the demand is holding on. And there is this activity, this area backed by the infra, the push on the infra from the government side. This will definitely hold out. That is what we expect. The other area in the medium and heavy is the buses, whether it is intra-city or intercity. The bus segment seems to be doing very well, including the EV buses that are coming on the intra-city routes. On the small and light commercial vehicles, also the last mile, I feel that the demand over there should still be better. But what we are seeing is on the medium and heavy, the long haul routes, there is a little bit of sluggishness. The movement has slowed down. Even the sale of new vehicles, as what we understand from the various OEMs, quarter four does not generally a very good quarter, but this time we'll have to watch this very carefully because at least what we understand, the demand is not looking up in this segment. When it comes to the 2-3 wheelers, it has a dependence on the rural demand uptick. In January, we saw that the demand was quite okay. There was a smart recovery, which was not there in quarter three. So if this scenario were to hold on, I think so the 2-3 wheeler aided by the demand from the rural markets should do better.
Right. Morning. Can you tell us a little bit more about how the raw material basket cost inflation has been on a sequential basis? Despite the jump in crude prices, what has helped your margins to grow steadily?
If I were to talk about the margins, in quarter three, we had an EBITDA of 15.2%, which is almost flat as compared to quarter two, which was at 15.3%. So what has happened is that you're right when you say that there is a increase in the overall raw material basket. We experienced that there was an increase of almost close to 2% increase in the raw material prices on a quarter-on-quarter basis. But we were able to improve our product mix. We have been working on premiumization where we make specific efforts to sell the premium SKUs, which definitely have better margins. And also we have worked on various other efficiencies on the plant side, wherein we try to reduce the conversion cost. So with these efforts, we have been able to keep the margin same, despite the increase in the raw material prices. Going forward, we expect that the raw material prices should be range bound. There is a kind of a volatility in some of the commodities, such as the natural rubber. But the other thing that we will have to keep on watching very closely is crude. As of now, it is well within control. And if it continues to be the way it is, I think so the overall raw material basket should be range bound. And at least in the near term, we will have to keep on watching it in the middle to long term as to how it pans out. But as of now, I think in quarter four, we shouldn't see a major change in the overall raw material pricing.
Right, Mr. Kathuria, great to have you today on the show and highlight where the earnings are headed and what's the visibility going forward.